the lecture series on insurance planning, in my previous lecture, I was talking about the different type of insurance policies one can buy, or I would say one should buy, because different types of risks are being covered in different policies. So the type of risk which you want to cover, it depends on the individual that which type of risk which you want to cover, and for that you buy the right policy and the right product. There are 5 different type of policies and the risk which I talked about in my previous lecture on the insurance, like the life insurance policy, the health insurance policy, the disability policies, the home policies, motor policies, motor vehicle policies. The other type of policy can be liability policy or liability. The other type of risk that rather I would say is being covered by the policies is liability. When I am saying liability, what it means is the insurance policies not only cover your own risk, but it can also cover the risk which arises, the liability which arises to you, which you have to pay to others. So this is called the liability insurance or liability type of risk that is also being covered by the insurance policies. So this is an insurance product that provides protection against the claims resulting from injuries and damage to other people or property. Say for example, let me take this example. You are constructing a home. You have your own home, and adjoining to your wall there is another home. You are getting your home majorly reconstructed, rather I would say, and in the process of that reconstruction, the walls which you are making, it damages your adjoining home, and because of that damage, the property loss takes place of your immediate neighbor. An immediate neighbor is claiming that since you are getting your house reconstructed, and because of this my house has been damaged because of your construction, and a liability arises. So you can buy even this type of insurance policies, that if any damage because of your action to others, not intentional action, unintentional action, right? Not specifically intentionally you have damaged it, but because which was natural in the process, which is general in the process, and any liability arises because of that, or any damage arises because of that action, right, which is not intentional. So that even liability can be covered by the liability clause, right? So liability insurance policies cover any legal cost an insured party is responsible for if they are found legally liable. Unlike other types of insurance, such insurance policy pay third parties and not to the policy holders. As I said in my example, that because of my reconstruction of my home, the home of the adjoining, or I would say adjoining home, is being damaged. So suppose that person files a suit against the person who is constructing a house, right, that because of your reconstruction my home has been damaged, and you have to pay for the legal expenses, you have to pay for this, the damage, the quantum of the damage that takes place, it is being quantified, and you have to compensate for it. That can be also insured. So on that individual who is constructing the house, no liability will arise, rather insurance company will pay, provided you have bought such insurance policy or you have bought a liability policy insurance, right? Suppose in a business also, in the business dealing, sometime there is a likelihood that some liability arises because of no fault of yours, but because of other reasons. If that liability arises, in that case also, if you have taken a liability policy, the loss that takes place to the third party, it will be taken care of by the insurance company, provided you have bought the liability policy. As the way it happens in the motor insurance. In the motor insurance also, that whenever you buy a motor insurance, the third party insurance is must. What is this third party insurance? Basically, this third party insurance means that because of your driving a car or driving a vehicle, if any damage takes place to the third person, who is unknown person, who is driving on the road or who is walking on the road, then the damage will be taken care by the insurance company. So this is nothing but the liability insurance. The other can be travel insurance. Most of us, when we travel, there is a likelihood that there can be loss of baggage, loss of the goods which we are carrying. There can be any loss, there can be flight delays, right? There can be serious ailment that can take place while in the traveling. Suppose you have gone abroad, you are going for a foreign tour, and as most of us know that especially in the Europe and American part, America and Europe, these countries, so-called developed countries, the hospitalization expenses is very heavy. And suppose during your tour to the Europe, or during your tour to America, or during your tour to any country, right? Suppose some hospitalization is required. For that you have to incur heavy expenses. And if you have taken a travel policy which covers your even hospitalization, your expenses, medical expenses will be taken care of. You lost your belongings. An individual who is traveling, he lost his belongings. And belongings, so it's quite all your important and the expensive things are in your suitcase, and that suitcase is lost in the way, right? So that loss that takes place, that can be taken care by the insurance company. So you can always buy a travel insurance whenever you are buying, especially abroad or even within the country. So travel insurance policy protects you against losses suffered due to loss of baggage, delay in flights, and trip cancellation when you are traveling abroad. Suppose you are going from Delhi, you are going to say Amsterdam, and your flight get delayed or your flight get cancelled. So because of this cancellation, you have to stay in the hotel, right? And for hotel you have to pay them expenses. If that is not being taken care by the company from which you have bought the air ticket, right, then you will have to meet out the expenses. So if you have taken a travel insurance, the travel insurance or the insurance company will meet out the hotel expenses. Otherwise, it will be a pressure, it will be a burden on your own pocket. So for that purpose, you can buy a travel insurance. So if you are hospitalized while traveling, a travel insurance may also offer cashless hospitalization. So our friends, after talking of these different type of the risk that can be covered by the insurance company, we talked about travel, we talked about liability, we talked about home insurance, motor insurance, the disability insurance, health insurance, and the medical insurance. These are the different type of insurance products which you can buy, which will cover different type of risk. So after talking of the different type of risk that is being covered by the insurance companies, or that can be purchased, or the different type of risk that can be mitigated, now I'll be talking about importance of insurance. Why do you buy insurance? What is the role the insurance companies plays? What roles does the insurance plays? See, buying insurance is necessary as it ensures that you are financially secure to face any type of problem in life. Friends, let me reiterate which I have been telling in earlier lectures also. In any financial planning, insurance is very important part. See, why this insurance is important? This insurance is important because what the insurance companies do, what the insurer do, that if any financial burden arises, that financial burden is being shared by the insurance company. That is the role of the insurance company, right? If anything happens to an individual, and that individual, anything happens means is if the person dies, suppose, and he has purchased the insurance policy, say of 50 lakh rupees. In that case of the death of the individual, 50 lakh rupees will be given to the nominees of the insured, that is a policy holder. So the family members can meet out the family expenses for a particular period of time or reasonable period of time. Had this insurance policy not been there, in that case, think of a situation if a person dies and the family doesn't have the accumulated wealth, how they will able to meet out the expenses, their livelihood. So their family expenses or their minimum expenses will be meet out if the person is properly insured. So in that case, if a pensioner has taken an insurance of 50 lakh rupees, the 50 lakh rupees will be given by the insurance company. So with this 50 lakh rupees, if the family members invested wisely, it will create some income and the family expenses can be met out to some extent. So insurance is quite important in any financial planning. The convenient part of the insurance is that you can purchase many insurance policies online nowadays. Means it is hassle free. Most of the insurance companies, they sell their products, they sell their policies online. So depending on your requirement, depending on the type of risk you want to get covered, as in my previous lecture I talked about various types of risk that are being covered by the insurance company, whether it is home insurance, whether it is a fire insurance, whether it is a motor insurance, whether it is a health insurance, the disability insurance, and so on and so forth, apart from the life insurance. So depending on your own requirement, you can buy the insurance. But it's very easy to buy the insurance policy, the question. Now, what are the benefits that arises to the insurance company as well as to the insurer and the insured? The first and the foremost that comes in my mind is peace of mind. If I'm adequately insured, I have a peace of mind that if anything happens to me, I have taken a life insurance policy. Say for example, I am a middle class person, I have taken a policy of 1 crore rupees. 1 crore rupees doesn't mean that I have to pay a premium of 1 crore rupees annually. I have taken a policy of 30 years. In the age of 20, I have taken a policy of say 30 years of 1 crore rupees. What it means is that every year I'll have to pay a small amount of premium, say 15,000, 20,000, right, 30,000, depending on at a monthly basis what you're paying, or you're paying quarterly, or you're paying 6 monthly, or you're paying 2 times in a year. The policy insurance company will fix up the premium amount. And if the person reaches that age, then the amount will be given. But if something happens in between, the money will be given to the family members. So I have a peace in mind that if something happens to me of my life, at least my family members, my children, my dependents will have their education, will have their 2-time meals easily, right? So it gives me a peace of mind, and peace of mind is the ultimate happiness of life, right? So by getting the insurance policy, you can get a peace of mind by paying a small premium amount annually, or depending on the type of policy, depending on the terms and conditions of the policy. So adequate financial safety offered by insurance plans can keep you free from stressing about your family's future. Along with the term insurance, you can also safeguard important goals for your child with child insurance policy. The moment child is born, then I think what will happen to the higher education? I'm a middle class person. What will happen to his higher education? Higher education is becoming very expensive. If there are limited few engineering colleges which are operating in the government sector, if my son or my daughter is not able to get admission in the government college, then I'll have to go for the private college where the fees is quite high. How will I be able to meet out the expenses, hostel expenses, the college fees and all those things? You buy an insurance policy, and right at the time of the birth of a child, so by the time the child will become 17 years or 18 years, right, by the time he or she will be entering the college, right, higher education, at the time you will have enough money. So buying insurance policy, or if something happens in between to that individual, you will not have to pay premium, but as and when the child will become 17 or 18 years, then the insurance company will pay the particular sum of money. With this sum of money, the higher education will be taken care of. So what it means is that insurance helps in the peace of mind to the individual if they buy the right policy of the right amount. The other thing can be it covers against uncertainties. As we have been discussing, this is the main role of the insurance policy or insurance product, that it covers the uncertainties. At the time of emergency, such as injury, accidents, illness, and even death, insurance acts as a financial backup. You have a financial backup. Suppose a person got hospitalized and the medical expenses are to be incurred, hospital expenses are to meet. So you have a backup that if I am not able to pay, right, if I am able to say you have bought a policy of 5 lakh rupees and the medical expenses, the medical hospital expenses are say 8 lakh rupees. So 3 lakh rupees you will be paying from your own pocket and rest of the 5 lakh rupees will be paid by the insurance company. So what it means is there is a backup by the insurance company that this much amount they will taken care of. So all those uncertainties which we have in our life, for which we have to spend heavy sum of money, these by buying the right policies, buying the adequate policies, right, we can avoid, we can mitigate these risks and uncertainties because we have a financial backup. So insurance provides safety and security against any sudden loss. Insurance plans helps you emotionally and financially so that your focus can be, the prime focus is on rebuilding your life. On the bed of the hospital, I'm not thinking how I'll be able to meet out the hospital expenses. I have to think what I'll do once I'm being discharged of the hospital. So how I'll cope up with this time which I'm spending in the hospital. I mean, this is the question in my mind. My mind is not being disturbed by how I'll be able to meet out these expenses, right? Hospital expenses. So these uncertainties of life, right, are being covered at least financially by the insurance company. So it covers uncertainties. Generate financial resources. Friends, a very large sum of money is being collected by the insurance companies. And these insurance companies, they don't keep the money idle, right? Because all policy holders do not come simultaneously to put a claim. A part of the money they receive is being claimed by the people who got the insurance, right? We call it insured. So these insured people who are not claiming, or say, for example, a person has purchased life insurance policy for 25 years, 30 years. And after 30 years, if nothing happens to the individual, money is to be returned. The resources, the premium which the insurance company collects every year, where they will put this money. They will collect this money and this money will be used for the productive purposes to purchase the government bonds, to buy, because they don't keep the money idle, they make investments. Where do they make investment? They invest in the government bond, they invest in the gilt securities, they invest in the industrial projects, so which will generate income for them. So it is very important that large sum of money is being collected and is being used for productive purposes. So funds are collected in the form of premium through insurers. Such funds are invested in government securities and stocks, means equity shares also. These funds are gainfully employed in the industrial development of the country to generate more funds and promote the country's economic growth. So in other words, it creates capital formation. The premium is being collected from the policyholders. The insurance company do invest in the government bonds. What the government do? Government, by collecting this money, spends money on infrastructure, put money on capital goods, which is used for productive purposes, right? So in this way, a process of capital formation takes place. The productive use of the money which the insurance company makes by investing it judiciously creates capital formation in the country. Encourages savings. See, one of the important role of the insurance companies is that it encourages saving. I've taken a health insurance policy. I'm a healthy person of say 35 years, and I know that there is no ailment, but still I buy health insurance. That if anything happens to my health and I require hospitalization or medical expenses, that can be met out by the company. What I have to do? First, I have to save. That the income that I'm generating, a part of income I'm paying as a premium to the insurance company. So very first thing is I have to save. So this, the role of the insurance is that encourages savings among the masses, amongst the individuals. People buy life insurance. People buy different type of insurances. For that, they will have to save. because they know it. They are every quarter they have to pay a premium, right? So every quarter they have to generate that much savings for them. Means what is savings? Income less expenses. That is part saving. So you will have to save to pay your insurance premiums. So it promotes amongst the people, it encourages people, it promotes people to save money. So various life insurance plans such as money back policy helps create regular saving by allocating some funds in the form of a premium every year. See, what is this? Let me just tell you what is money back policy. Money back policy means there is a policy called where there is a term policy where suppose you have bought a policy for 10 years. So after 10 years only you will get the money. I am talking of say life insurance. But you have purchased a money back policy and the terms are that after 5 years you will be paid some sum of money, right? And after 10 years you will be paid rest of the money. So this money back policy gives you the amount during the tenure of the insurance policy also. So you are getting a money back policy, you have paid premium, you have saved, right? So this helps you in saving, and this money which you receive from the insurance company, you will further invest it. So it will help you in promoting savings. It encourages people to save. So unlike the basic life insurance plans that gives claims at the time of maturity, a money back policy pays an amount to the policyholders after a few years of investing in the policy. So what will be the few years? Depending on the terms of the policy. After how many years? Suppose you are buying a policy of 50 years, right? So after 5 years, after 10 years, you will be getting a particular sum of money. This is called money back policy. It helps economic growth. Insurance companies pool a large amount of money because how do they pool the money? Because a very large number of the insurance people who are buying the insurance policy, their money, they pay premium, and this premium creates a pool of money to the insurance companies. So part of this money can be invested to support investment activities by the government. Due to the safety concerns, insurance only invest in gilts. Gilts means those which are, government securities normally are called gilts, right? Government security means which can be saleable very easily, which has good liquidity, which can be sold at any point of time, which has all the good features of any financial instruments. These are called gilts. So they invest in gilts or government securities. So on the other hand, government can raise funds easily from the insurers for large public projects which aid in economic growth, right? So because let me take the example of public sector insurance companies like Life Insurance Corporation of India, United Insurance, Oriental Insurance, right? Whatever the premium they collect, this money is being taken by the government. Means obviously the insurance companies offers money to the government in form of buying the government bonds, government securities, and government in turn spend this money rather I would say, in the infrastructure projects. This creation of the infrastructure, basic infrastructure in the country, right? That helps in the economic growth, that increases the tempo of the economic growth. So in this way, insurance helps in economic growth. It provides medical support. In my previous lecture also, I talked about different type of risks that are being covered. So in this also, it helps your medical support. If anything happens to the health of the individual, that will be taken care by the insurance company, provided you have purchased health insurance policy. Distributes large risk. This is how insurance companies work, right? In my previous lecture, I talked about how the insurance policy works. It is a basic, I would say, a method by which the insurance companies work. Lakhs of people have got insured for the same type of risk. They will not be affected. All of them will not be impacted at one point of time. Only a few will be impacted at a particular point of time or in a particular period. Supposing if 1 crore people are paying premium, all of them are not going to die in a particular year. Only a few of them will die, for which the insurance company will have to pay the policy amount. So what is happening? That 1 crore of people are paying, but out of the 1 crore, X number of people dies. So the premium that is being collected, that is being paid, Not all the amount, a small part of it is being paid to the individuals or to the nominees of those individuals who have died during the year. So what is happening? The risk is being divided, right? So the risk any individual takes, that is being divided amongst the large number of individuals. So insurance is a financial instrument. The risk of the significant loss due to an event is borne by a large group of people expressed to the same possibility. Same means same type of risk with the same possibility. Thus, the losses are distributed over a large group, making it bearable for each individual. How it makes it bearable? By paying a small premium. That's why I say it making it bearable. Just by paying a small premium, you can be covered by a large sum of money. Make retirement secure. Since I am saying that insurance policies are also the financial instruments. So there are a whole host of retirement plans, right? And which covers the insurance policies also, or I would put it this way, there are many insurance policies which provides you money at the time of your retirement. So when I'm saying retirement means a time when you are not able to earn a regular income. So a retirement policy is a type of insurance plan that help you to save some portion of your income over a long-term period and makes you financially secure post-retirement. The accumulated income will be paid back to the insured person as a pension. So friends, in this lecture, I have talked about what is the benefit and what is the role of the insurance companies and the insurance, and why insurance is important in your life. So because of the various factors, because of the various reasons which I talked in this lecture, every individual should buy the insurance policy. It should be treated as an investment. It should be treated as a product which can mitigate your various type of risk. Thank you very much.